Hello, I'm Helen Pete with the Australian Market Report for March the 18th. Overnight, Wall Street closed significantly higher on better than expected US housing starts. Investors believe the market is moving towards a gradual and steady gaining territory and started to buy in stocks of banks and consumer companies. Yesterday, the Australian share ended 3.1% higher, lifted by banks and miners. The benchmark S&P ASX 200 index gained 103.5 points at 3451.9, while the broader All Ordinaries index was up 96.1 points, or 2.91% to 3393.4. At 11:30 a.m. today, the S&P ASX 200 index gained 19 points to 3470. Today, the local market has delivered a strong opening boosted by the Wall Street rally. And now for the key economic facts and figures. The Reserve Bank of Australia has released the minutes of the RBA March the 3rd meeting. The board of RBA believed that leaving the cash rate on hold at 3.25% would provide adequate flexibility for policy at future meetings. Today, the Westpac Melbourne Institute released its Index of Economic Activity. The index dropped 0.6 of a percentage point in January, dragged lower by slumping share prices, US industrial production and home approvals. The leading index is now in deeply negative territory, consistent with contract economic activity, said Westpac senior economist Matthew Hassan in a statement. Now in mergers and acquisition news, ANZ Finance unit Esanda Finance Corporation will become a bank division. ANZ said in a statement that Esanda's earnings and balance sheets are already consolidated with the banks for the reporting purposes. The transition involved transfer of $13 billion Australian worth of assets from the Esanda entity to ANZ. On to important corporate news. Ansell said it has won a $1.6 million contract to supply lubricant and 20 million condoms to the New York City Department of Health. The Commonwealth Bank said the bank would remain within its guidance on dividends. The ANZ and National Australia Bank have already flagged dividend cuts. David Jones has posted a 2.4 rise in net profit for the half year of January 24, 2009 to $91.2 million Australian dollars, up from $89 million Australian dollars on the prior corresponding half. The company reaffirmed its net profit growth guidance of up to 5% for the second half of 2009. Rio Tinto last night appointed Jan du Plessis, an existing director, as its new chairman, following the resignation of previous chairman-designate Jim Lang. Mr. du Plessis will replace Paul Skinner as the company's chairman on April the 20th. Territory Resources has posted a $33.34 million Australian first half loss, compared with a profit of $2.03 million Australian in the previous corresponding period. The loss is largely due to its booking of $38 million Australian in charges related to investments and currency movement. And finally, ANZ has appointed Graham Hodges as its new Deputy Chief Executive, after the incumbent Bob Edgar decided to retire. You've been watching the Australian Market Report for March the 18th. I'm Helen Pete. Have a good day.